Good morning. It's Monday, July the 12th. I'm John Kincaid with Dennis Nelson at the Naples Money Managers, and we wanted to provide a little insight of what we see with investors and kind of their temperament, some of their emotion, and some of the challenges that exist in the market today for a wealthy investor. For me, Dennis, what I've noticed, the last couple of prospective clients that I've sat down with have had the concern about capital preservation. Now, these are people that have made money over a long period of time, 30 years plus, right, in the equity market, which usually works all the time. But now they have this inclination to say, and maybe it's because of what's going on in the market today, they're being more proactive in saying, is there some way that we can preserve the wealth, get a little bit of growth, maybe some good income, but still control the volatility as we see today in the market? And you and I have talked about a lot of volatility in this value discussion versus growth discussion in the investment field. Kind of in a nutshell, what does value mean? What does growth mean? Why do investors have to consider those two areas?
Well, I think value really, if you're going to look for a definition, it's pretty hard to get your arms around. For my money, it's older companies that have been around a long while, that are well established, that growth prospects on a large company appear smaller, minimal, and pay a dividend and aren't viewed as something that's got a huge growth forecast in the future.
As compared to maybe...
And you get a lot of those type of companies, even in what might be growth category companies. You look at Microsoft, they've been around forever. Right. Pay a dividend, are huge. So in some people's mind, they might be categorized as a value company. But a value company with pretty good growth prospects in my view.
So for a typical consumer investor that's saying, where should I be in this market? I want to be in the sweet spot of the market. To define these is becoming much more difficult, wouldn't you say?
Much more difficult. I agree with you there. Those traditional viewpoints on different segments of the market really, I think, are kind of breaking down. Right. In this environment where you really have companies that are big companies, but that are disrupted by some technology and may not be in existence 5 or 10 years from now. Okay. So we look at risk. I look at risk, and I think a lot of people define risk as volatility. How much volatility can a portfolio stand? How much can a individual investor take and still not get so worried that they would just exit the market at any cost? To me, that comes to the crux of it, because over a longer period of time, the stock market has always done better.
Going back to these prospective clients that I've been talking to, they have amassed a nice portfolio over a 30-plus year period. And we know that equities work over time. If you have a 30-year period, and if you're in the equity market, you're going to do fine. The question now becomes, in these markets, how do I kind of keep those assets that I've grown kind of a little bit more tempered in their volatility? That's how we talk about risk, because that gets so emotional.
Yes.
For clients.
Well, and of course that's what we use. That's our sweet spot is controlling volatility.
Right.
And we do that using options. I said the O word. But you've got to find a mechanism to control that volatility, or either that, or you're faced with using treasuries to control volatility, and of course we're talking about returns that are nil. And not only that, likely facing a higher interest rates in the future. So you don't want to get locked into a 10-year treasury at 1.5%.
So the market today, a lot of investors will say, I'm either going to take some of my profits that I've accrued over years of investing and maybe go to cash. That's their strategy for limiting volatility, or to treasuries or some type of fixed income instrument.
That's sort of the traditional way. I can say that the traditional way of controlling risk is to have a portion of your portfolio in either cash or a fixed income.
So the challenge becomes, and I go back once more to these prospective clients who say, I don't want to necessarily be in cash because cash did nothing for me over these past 30 years. So the challenge becomes, if you're going to be in cash or treasuries, you have to make two perfect decisions, basically. When you leave the equity market or the stock market to go to these cash equivalents or whatever, and when to go back to increase some growth over time. So it really becomes a loser's game as far as trying to manage that.
And I think when you get to that question, you talk a lot about inflation. You know, I always go back to my grandfather in the 60s, and this is a short story, so it won't take long. But he had his investments set up to produce income as he went into retirement. Utility stocks. I remember he owned AT&T bonds. Loved those AT&T bonds. Well, by the time the mid 70s rolled around, those AT&T bonds were trading at 50 cents on the dollar.
Wow.
Yeah, wow is right. And that was because of inflation and inflationary expectations. If this inflation gets out of hand, well, you have a very different scenario about going to cash and going rather than investing in the stock market.
Right.
Growth.
So the whole strategy at the Naples Money Managers for the last almost 40 years has been, how do we approach the market, get some appreciation, get a lot of income if you want to take it, or it can be reinvested to compound.
Reinvested, right?
And with doing those, by achieving those two objectives, then being able to calm this volatility problem.
Absolutely. We've traditionally been able to reduce volatility by 50% in a down market.
Right. So we kind of call it an all-weather type of approach, whether it's raining, storming, or it's cloudy or blue skies. The strategy works exceptionally well over time.
Indeed it does. Served us well.
Right. Well, thanks for being here today. Remember that you're the most critical component as clients here at the Naples Money Managers, and we wanted to keep you up to date. Have a great day.